Here's $20. If I wanted to save it and make the most out of my money, what should I do with it? A popular answer might be to invest it, but for others, a saving solution could be the better play. So to save this $20, I could put it under my mattress, but then I wouldn't be earning anything. Or I could deposit it at a bank, and that could open up way more options with better returns for me. We aren't talking about just physical cash here, like this $20 bill in my hand. We're talking about cash and cash equivalents as an entire asset class. But I know for a fact that if I keep this in my wallet, it's going to get spent. This is why I'd likely look at high-yield savings accounts with a competitive annual percentage yield. Almost every person I talked to for this video agreed.
A high-yield savings account, no questions asked. The rates are fantastic. It's liquid, it's easy, it's FDIC insured, and I don't have to worry about it.
If it's just cash sitting there, put it in a high-yield savings account.
I think right now, high-yield savings accounts that are usually going to be with online banks.
Maybe this HYSA, high-yield savings account solution, isn't as popular as it seems. Only 22% of Americans with savings are earning an APY of 4% or more, according to this Bankrate survey. There is no right answer here, and most people have a slightly different strategy and financial situation. So let's hear from finance creators who spend their time thinking and talking about money, about where they would like to stash their cash. What is your favorite place for cash right now?
So any of the online banks are going to offer you typically a higher yield than some of your more popular banks like Bank of America, Chase, all of the, the big banks, because a lot of people still have their cash at these mega banks, and they're earning little to no interest. So I really encourage people to put their, take the time. I know sometimes it's just like a hassle to transfer your money, but just take some time and little by little transfer your money over to a higher yielding savings account. Some are getting at least 5% return right now, and, take advantage of the higher interest rates. It's bad on, if you're trying to buy a house right now, but it's really good in, your basic savings account to meet, earning that interest. So I do recommend people look at some of the online options. They don't have, you can't walk into these, that sort of thing, but they're really safe. They're FDIC insured. So I really recommend that people do that.
So you might not be surprised that Shahida agrees that online high-yield savings accounts are a good place to park some cash short term. For her, it's all about taking advantage of that high interest rate while you can. If that's your plan, check out NerdWallet's reviews and partners who can help you get started. But what about inflation? With no change to the Fed funds rate this month, the target range remains between 5.25 and 5.5%, meaning that your savings accounts are probably going to earn somewhere a little bit underneath that percentage. Talking to a friend and financial journalist Jacob Wade from Roadmap Money, I asked what he thinks about purchasing power being eroded by inflation today. Is it worth even saving right now with how high inflation is in 2024?
I think over the last 100 years, the dollar has become at least like 26 times less valuable, or a little more on the latest stat that I looked up. Just holding cash for a long-term investment is a poor investment. You're literally losing wealth instead of building it. And so for me, cash serves a purpose. I'm not a big fan of holding extra cash just to have it there. To me, it's not an investment. It's not going to keep up with inflation historically. And yes, rates are awesome now, but the only reason rates are awesome is because inflation was so high. So even then, you're still not quite keeping up.
Are you the physical envelope guy? Are you the digital high yield savings account guy? How are you actually managing your cash right now?
So the way I allocate my cash is I have an emergency fund account and a simple high yield savings account. But then I have these other smaller savings buckets for things like Christmas, car repairs, travel, birthdays, things like that. And so I literally name each of those accounts, and then I set up automated savings every month.
Speaking of savings buckets, Minority Mindset host Jaspreet Singh broke down his saving strategy for me and the reasons he saves where.
I save cash for 3 reasons. Save cash for an emergency, save cash for an investment, or save cash for a purchase. So now, if I'm saving cash for an emergency, that's one bank account. I have a savings account dedicated just for my protectionary cash. Then I have cash that's waiting to be invested. I have cash that's waiting to be invested in the stock market. I have cash that's waiting to be invested in the real estate market, high interest savings account. Then I have cash that's for purchases, and that's in a checkings account. If I was saving to buy a house or something else like that, that would be sitting in a high interest savings account because that's a much larger purchase. But it's really just what's accessible and what is it for. And for me, it's having it safe and having it at least generate some yield if it's not currently invested. I also own some physical gold, I should say, which is an alternative form of what I call saving. But it's not huge. It's about 2% of my total portfolio. And I don't look at it as an investment. I look at it as an alternative form of saving.
So gold does not produce cash flow like other assets and should only be a smaller piece of your overall portfolio, if at all. But if you are interested, there are multiple ways to invest in gold, such as gold bullion, that means the actual physical metal, gold stocks, gold ETFs, and gold futures, each with their own pros and cons. So let's get back on track with cash. There are other options besides just a high-yield savings account. Remember, when we talk about cash, we're talking about cash and cash equivalents. So some other examples of cash investments are treasury bills, certificates of deposit, aka CDs. I'm sure you've heard of these at your local bank. Money market funds, and also short-term government bonds. Do you invest in like CDs, T-bills, anything like that?
So not currently. I like the liquidity and simplicity of a high-yield savings account. I know that you can get more yield out of things like T-bills, CDs. I know there's some strategies for building multiple CDs so that you can, they can kind of mature and then get rolled back in, and you can create these CD ladders and things. I'm just not at a point where I want a lot of fixed income. I want just simple cash that's liquid and the rest is in growth. I would say maybe if I'm closer to retirement, I would consider some of these other cash equivalent vehicles, but just not at this current time in my life.
We have an emergency fund / opportunity fund, if that makes sense. So we have some money that if we needed to move, say we had like an investment or something, we had to get money a little bit faster, but we still have it in the high yield savings account. But everything else either goes to a Roth, and sometimes we're making over that amount for the Roth. So we have a SEP, a self-employment pension. I have my husband's a teacher, so he still has a pension with his job. So we're kind of like a little bit all over the place. We have 529 for both children. And then, those Roths and that SEP is in like index funds and that sort of thing. So I don't really do that many T-bills, or I try to keep it as simple as possible, to be honest with you, that we just have that money where it's growing as much as possible and things that we all understand.
Yeah, of course. I mean, yeah, we can't all. No, I completely agree with you. Your situation, my situation is very similar. We have 2 little girls. We have 529 plans. My wife is a nurse practitioner for the state, so she has a pension as well. So, What percentage in cash and net worth do you think is too much?
I definitely believe in an emergency fund. When I was making the transition to leave teaching, because one thing about teaching, you're going to have a job, right? When you're doing real estate or YouTube, it's a little, some months are a lot of money, some months may not be a lot of money. So I definitely recommend, if you have something that's not as stable, like a stable employment, 12 months actually of expenses.
That's literally my rule of thumb. So typically, I usually say if you're a single guy or gal, 3 months is enough. If you have a family, maybe 6. And then if you're like an entrepreneur or commission salesperson, then I do 12.
I think you have to have a reason to, really be holding more than that, I guess. If you have something, maybe you need a car. Like we have really old cars. And so, we know at some point one of our cars are going to like just die. And so we may just save some extra money for the car in anticipation of that. But if there's nothing specific that we need to have cash for, we try to, make sure it's working to the best of, its ability, I guess. So we don't want to keep too much cash, or maybe less than, if you're doing a percentage and not like the 12 months, maybe less than 10% or lower. But just really, you don't want to have cash there for no reason. So have a reason above your emergency fund to say, okay, well, I'm saving for maybe a car, something you need in the shorter term that you might see coming up.
So savings in cash is a double-edged sword. So being a disciplined saver is obviously a good thing. Yes, you are earning an interest rate or an annual percentage yield, which is almost risk-free and usually FDIC insured up to $250,000 per account or more, but you're actually losing your purchasing power to inflation by keeping your money in cash. For example, if I'm earning 5% in a high-yield savings account, but my costs of goods and services have gone up 10% in that same time period, I just lost 5% of my purchasing power overall. But on the other side of that sword, this is why I'd save in cash for an emergency fund, and anything above and beyond that emergency fund amount should be invested, in my opinion. Again, I'm not a financial advisor, but these are just my personal thoughts. Cash might also be a good route if you have more immediate needs, like saving for a car or a house or a down payment or a wedding, for example, or something that you plan to buy within the next 5 years. So the rule of thumb, just to hammer this point home, is that if you need the cash within 5 years for a specific goal, then it might be a good reason to put that in the cash category of your overall money management plan. Hopefully the insight and value that you got from this video, the creators, and also my own opinions will help you manage your cash in a better and healthier way. Thank you so much for watching. Make sure to share this video with a friend, share it online, or anyone else who's interested in saving more money.